All right. Am I audible?
Yes, you are.
Yep.
Okay. Okay. Hi, everyone. Welcome to today's video. Today, we would be talking about a technique which is known as short squeezing. So let's begin with short squeezing. It's a fairly simple and very easy technique, but it's quite successful in generally US market. But there are some categories where I've tried in Indian market as well. Some stocks in which I've tried with, I've back tested on Indian market as well, and it has actually worked. So let's start with that. Okay. So first of all, let's try to understand. I want to ask a few questions before we start with this technique. It will be relevant to the technique that we are trying to learn today. What if a stock is moving in the upward direction and I'm bearish about that stock? So for example, there's a stock which is moving in upward direction, but मुझे मालूम है कि भाई this stock is going to sell off. This stock is just moving and it has no basis because of which the stock should sell off. So what I can do is I can short the stock. I can sell the stock because I know that the stock is selling out, right? I am expecting that this stock is going to sell off. So what I'll do is I'll sell off this particular stock. What if this is the herd mentality? Now, what happens is if this is the herd mentality, then everyone who is seeing that, okay, this stock is moving up, it is actually creating a very good sellout opportunity that, okay, this is the time that we should actually sell this stock off. So now if everyone starts doing this and the stocks keep moving, then there would be a tension that would be created in this particular stock, right? Am I correct? People, Soreo, Ayush, Aisha, Alina.
Yep.
Right? Now, what if the stock which is moving upwards, the stock might not be performing that well on paper, but there's something which is internally happening inside the stock. There's some research and development which is happening inside the stock, because of which this stock is actually, the prices are actually moving. It could be because of some insider trading. I won't say insider trading as such, but it could be because few people who are in that particular company, they actually know that there's a very good research that is currently going on in this particular stock, because of which we should buy. There's a very good future potential. Now, what will happen is, because of this, the stock will keep rising. It's at 1,000 right now. It might go to 1,010, 1,050, 1,060, 1,100 or something like that, right? Now, what will happen is, because of this stock, moving upwards, the sellers who are there in the market for this particular stock, because of all the fundamental analysis or XYZ analysis, or maybe market trend, maybe herd mentality, because of anything, because of which they started selling the stock, what will happen? They'll have to square off their position, right? Otherwise, they'll just keep on booking losses, correct? Now, what
Yes.
happens? Yes. So what happens is, these people, so the price itself is moving upwards, right? Because of these sellers, there could be a slight, sell off in the stock. But ultimately, what is happening is everyone keeps on buying this particular stock. Because of which, what happens is this particular stock, what happens is this particular stock will actually keep on moving upwards rather than going down. And then as soon as the news hits the market that, oh, okay, this was the research and development which was happening in this particular stock, because of which more and more people will start, buying that particular stock. And, even if the company was dying, this could be a reviving phase for the company, right? So because of which, because of the company was dying, everyone was actually selling the stock, but something absurd was happening inside the company, because of which the company could now actually be reviving itself by this particular research that it has done. So this is what short squeezing in general is. We'll understand what exactly happens in a short squeezing. Now, what will happen? Suppose that Ayush and Aisha and Alina, you three don't know about this particular stock, and you three are, you three did some fundamental analysis, and you thought that, the prices are rising, but there's no fundamental backing of this company. So you three started shorting the stock, right? Now now I was someone who knew that okay, there's some internal R&D which is going on in the stock market, and people, 100 people like us, were actually moving the price upwards. Okay, so because of you guys, the price actually went down a bit, but ultimately what you'll see is the prices of the stock were actually moving up. So now there's a breakout zone. So this is the normal trading zone in which the stock was actually, trading. But because of the news that broke out, there was a sudden surge, and it actually broke its normal trading. Now, what exactly do you think will Aisha, Ayush, and Alina, what will you guys do as you see that, okay, it has now broken the normal zone? What will happen? What will you three guys do? Will you book a profit, or will you wait this stock to move down, or will you guys just book a loss and move aside from the stock and then go for some next trade or next investment?
We can start averaging our losses, like we can start buying, and we should not sell our previous stocks, so eventually it will average out, and if we are seeing it is going upward, so we can also book a profit.
That's a valid point, Ayush, but the problem with selling or shorting is that shorting can be done only on future stocks, right? And future stocks always have an expiry associated with them. So even if you go and average the stock out, you hardly have a month's time. You have from 1 week to a month's time to actually just sell your stock off, buy back your stock off. Otherwise you'll just you'll just lose everything on it. So averaging is mostly done on buying a stock. It is not done on selling a stock, because buying you can keep for 10 years, no issues. You know that the stock will move up. You are quite confident with the stock, so you can always average it out, and you can always keep it for next 3-4 years, 5 years, and you can of course average it out if the price goes down. But contradictory in short selling, you cannot do that because there's an expiry associated with it. Then what will you do? Ayush? You'll have to square off the position, right? Short and sweet answer. You'll have to square off your position. If you don't square off your position, what will happen is you will end up making a lot of losses, and then ultimately the short will get squared off.
Yes.
Make sense? So what is happening is you, since you have sold the stock, you'll have to buy it back. So already 100 people were buying the stock, or say 1,000 people were buying the stock. Now there are 1,010 people. If there were 10% or 20%, there were 20% people who had actually shorted the stock. But now because of, shorting it, they'll have to buy it back because they'll have to, book a loss on it. There's an extra 20% volume which gets created, because now those people are buying that particular stock. So therefore, there's an extra 20% volume which is getting created, or 10% volume which is getting created. Because of this, the normal trading zone of the stock gets broken out, and there's actually a burst in the price, or there's a sudden push in the price, which can be leveraged. So you can have a look at the buying, you can look at the buying and selling volumes of a particular stock. Mostly this is done for so short squeeze will generally, it's not a hard and fast rule, but this is generally short squeeze would be done for intraday, a day, 2 days, 3 days, 1 week, short span of time. It wouldn't be done for a very long period of time. It can be done on a long period of time in US stocks because there's a different funda over there, but it's generally not done in Indian stocks, because in Indian stocks for selling, we have an expiry associated with it, right? So because of this, there would be a sudden outburst. It will just, move away from its normal trading zone. So that's where you can keep an eye on the stock, that, hey, this stock was actually going sideways in the zone that it was trading, and it has just, leaped out of its normal trading zone. So that's where you can keep an eye that, okay, is there a sudden burst in the buy price, in the buy volume that is happening? If there's a sudden burst, then that's when you can see that, okay, there's a potential short squeeze which is happening in this particular stock, and you can buy at these zones and then sell off at a peak and then just, book the profit in between. So there are a lot of examples in US based stocks for this, but in Indian based stocks, I don't want to show any examples because there were other logics which were actually involved with, along with the short squeeze. So therefore, I don't want to pinpoint those stocks, because tomorrow you might say that when you go for technical analysis and all, you'll say that, hey, this could also be the reason because of which this particular thing happened. So this is a concept which is a very working concept in NYSE market, in Dow Jones, in Indian market as well. Just something to keep in mind. And as we understand more, as we go towards technical analysis, then we can use more, more of those techniques alongside with this short squeeze technique to come up with a better prediction and make a better call that whether to buy this particular stock at this price and will it actually go to that level or not. Make sense? So this was, a basic overview of what short squeeze is. And this will actually help us a lot in analyzing the stocks in future when we do technical analysis, when we study technical analysis and fundamental analysis. Okay, guys, questions? I know it's very short and sweet, but this is how we'll keep it today. No questions? Ayush, Aisha?
Like how much percent we can say a stock can rise? Like there can be multiple factors, right?
Right. So generally speaking, Ayush, this is not a hard and fast rule, but for the bottom of the normal trading zone, you will keep it as your stop loss. And there's again a cup and handle theory, or you can will use other technical analysis parameters such as head and shoulder, or there's cup and holder, which is which could be associated with this particular short squeeze. So based upon those, whatever technical analysis gets fit with this particular, strategy, will take the target and stop loss based upon those parameters. So again, it's a good question, but stay tuned. That's what I'll say for that.
Okay.
Okay. Anyone else? All right. Thank you, everyone. Thanks for your time, and I'll see you guys tomorrow.